start our own business because we lost our job and need money quickly, out of the pure necessity of generating income. In this scenario, we would not expect to receive capital from startup accelerators, angel investors, or venture capital investors. Instead, we as an entrepreneur, from pure necessity, would expect that initial capital is very much limited to what we personally own, our personal savings and loans. We want to have to build our own business from our personal savings and reinvest any profits to grow our business at the same time with very limited access to external funding. This financing concept to basically build up a company from scratch by ourselves is called bootstrapping. If we have a look on the Wikipedia article on entrepreneurship, we found a section on bootstrapping. And here, the common definition, which is a consensus definition of bootstrapping, defines it as a collection of methods used to minimize the amount of outside debt and equity financing needed from banks and investors. In other words, in very simple words, building it up from scratch, not making use of money from others like banks, typical investors we see in entrepreneurship. This means that we will use owner financing, including savings, the personal loans, credit card debts, and a couple of further methods to make sure that we earn money quickly, being able to reinvest it and organically grow by ourselves. Does this really work? If we ask ChatGPT, what corporations started with bootstrapping? Let's see what companies we get on the list. MailChimp, Basecamp, Atlassian, GitHub, Qualtrics, those are big names. So it seems that it is something which actually appears in real life in our real world. At the same time, what I see here and recognize here, that those companies mentioned in ChatGPT are mainly coming from the software and internet industry. So it seems to work in this domain. I am sure that there are many medium-sized companies out there which are still run by their initial founders, just started with the own resources of those founders and are not from the software and internet sector. Today, in our session, we will check whether bootstrapping finance will actually really work in a business simulation game like Capitalism Lab. We will try this out in Capitalism Lab and only allowing our corporation to have very low initial capital. So as next step, let's start the game and simply try it out. So this is, as always, the main menu of Capitalism Lab. We will start a new game. We will start a custom game. We will choose a corporate color and a logo we can easily identify on the map. Our corporation name will be the LP Corporation. The environment will be set up with 4 cities. Our startup capital will be very low, the lowest setting, because remember, we'll try out and make use of bootstrapping to set up our company. Instead of setting it to very high, which means 500 million in the beginning, we'll set to very low. This lowest setting will grant us $10 million as startup capital, which from my perspective is still a high amount. However, in this business simulation, anywhere below 10 millions will be very difficult to accomplish. We will start in 1990. We will again, as in our previous sessions, have 12 competitors They will be set up on a moderate level, so will have much more money than us, will be moderate on a moderate level of aggressiveness, pricing, expertise level. For the products being available from seaports, we set one seaport for consumer goods and one seaport for industrial goods per city, because we are not looking into building up a retail empire. We really want to produce something on our own, just coming from $10 million and then growing our business. We will limit this very much. What we see now in the overview is the difficulty rating is a little bit higher than usual. We usually play out our strategies in a level around 180%. Now it increased to 201%. Let's see how this works out for us. I'm starting the game now. We have the 2nd January of 1990, and we are looking on the map of the city of Winnipeg. As always, in first step, highly recommended, look on the world map, check out the 4 cities and decide where to start. You can only start in one city, of course. Winnipeg has a population of 1 million inhabitants, which is quite fair, with a rate of 72. This is already the highest value here. We have Bogota, part of the business simulation here, with a high population of 3.8, almost 3.9 million, which is fairly high, with a low wage rate. This could be interesting for our bootstrapping scenario here. Leipzig, below 1 million, Palermo, slightly above 1 million, both in the range of 60s for the real wage rate. Probably not the right place to start our business, but let's see, because we need to investigate more of the impacts and factors before we invest our very tiny budget into something which hopefully works out. Just as a word of caution, I tried this out a couple of years ago and I'm not sure if this really works. This will be also for me a new situation now. Since Bogota has a low real wage rate, which I assume would mean that we have a low cost structure, interesting cost structure, and we will save money in setting up a business there and have low operation expenses. And we have a huge market there. This could be an option to start and invest our money. With such limited amount of money in the beginning, we need to be really cautious and need to select a product to produce which needs a very low initial investment and which we can sell without having a very long supply chain. And this is where in the base game farming is very interesting. Livestock, raising livestock. Livestock is right from the beginning available, not like crops. We need to wait for sowing month and crop grows, and then afterwards it will be harvested. Livestock is initially available from more or less day 1, day 2. And from livestock, we can generate livestock products we can directly sell to our end consumers. This is for the case of cattle, frozen beef. For chicken, it's frozen chicken and eggs. For pig, it's frozen pork. And for sheep, is frozen lamb. Before we now randomly choose one of those products by our farm and produce it, let's always investigate first in the market we aim to go. And this time it's Bogota. Remember, it's highest population, lowest real wage rate. And first, let's check out the market. One factor is the product available from a seaport? If a competitor has an easy way to import high quality livestock products, then this would be definitely a high risk for us. In the case of Bogota, we see here products which are produced from livestock, leather briefcase, leather wallet, leather jacket, but actually this is not what we will go for in the first run and the first initial investment, so we don't care about this one so much. Though if we want to later on diversify in leather products, this would probably be a challenge for us because the quality rating is not too bad. For the leather wallet it's already 58, for the leather jacket is 42. Let's investigate the market itself. So for cattle, yeah, we can go on the product view here. We will simply choose Bogota as city, all products, and then move into the category of livestock products from all companies. We see X as is the market size is approximately 5 million. We have a quality of 28, brand rating of 27. Frozen beef is 4 million, higher quality. Well, this is probably difficult. Frozen chicken, 4 million, 23, looks interesting. Frozen lamb, 36, also high. Frozen pork, 25, not too high. So now we will take some initial knowledge from our previous runs. We know that if we set up a new farm, raise livestock, the initial level of quality will be 30. So we will be, not even for all of the products here, livestock products, be above the local average quality. So this definitely is a challenge, and we need to go and enter the market with a very low price to compensate for quality and, remember, for the brand rating. Since we are starting a new business, there will be not a brand rating for our brand. It will be just 0. And also this needs to be compensated with a very attractive price position. So in this case, let's go for those where we at least can outscore our competition, our local competition in this case, with the quality. For brand, we will not take care too much in the beginning. Just to have an overview, and for all of those, including myself, who would like to take a structural approach, a very good concept to follow is the marketing mix, the 4Ps. The 4Ps start with the product, which in this game means product quality mainly, goes over to the pricing. Of course, we will have here, and we always need to set a price. Next comes place. Yeah, it matters where we put our selling point to our end users. So we will choose somewhere near to a CBD, a selling point, and additionally promotion, which in Capitalism Lab mainly is around brand awareness and brand loyalty. Investing in brand awareness takes a lot of money and will sure consume a large amount of our 10 million. So we will not take care of this too soon. However, for price, we directly have control on it. Quality, we know 30 is the starting point. And the place we can choose according to our budget. So let's go for X. Let's go for frozen chicken, and let's go for frozen pork and one farm. Bootstrap financing, very limited money, means we need to really look on our cost structure. We need to look into each dollar to save. This means that for the first farm, we will choose the medium-sized farm, which comes with the lowest setup cost and the lowest monthly cost. We will choose a location not too far away from where we expect to sell, probably in this area. I see here potentially high customer index traffic. We see that land costs are very expensive. Actually, will eat up already half of our budget. But there's no choice, right? Let's check for a location. It's not so far away from the place where we want to sell. Maybe here. Save on transportation costs, by the way. And already more of half of our 10 minutes is gone by setting this. We will now have to invest smaller amounts into livestock raising, into livestock processing, and of course, sales. No, this was wrong. Already lost this money. Should not do this error. So for the first units, we will choose chicken because we want to produce frozen chicken and eggs. The livestock we have here, we raise here, we will process for eggs and frozen chicken, and then we will have a separate value chain here for, what did we say? Let's double check that we don't choose the wrong one. Frozen pork, in this case, low quality rating, high brand rating, but still, what option do we have? Let's try it out. So we will advance the simulation by now 1 day. We are on the 3rd of January 1990. We'll select now the products, frozen chicken, eggs, and frozen pork. Let's wait until the product is available for sale. We have frozen chicken, egg, and frozen pork available to sell to our selling point. We still have a budget of 4 million left. Maybe this is enough to set a very small store and sell our product there and survive for a couple of weeks, maybe months, to get into the break-even point of our investment we do. But first, let's check again the prices. So frozen chicken, $2. This of course much too high. We need to set this to half of it, below $1. For eggs, it's 150. So we set it. So our aim is to be in the overall rating of approximately 68, 63, below 70, but above 60. And usually this is accomplished with half of the end price. Frozen pork, 190. We also see that the market side is significant, so this is not the issue here, but the brand rating for frozen pork could be challenging for the chicken products. Let's see. So now we have the products available in our farm, but still we need to sell it to our end customers. We will now look into a nice position. We will choose a store which sells livestock products, which is basically food, but does not use too much land. Land is very expensive, right? And is a small operating expense. And this is where I recommend to choose the convenience store. It has a low setup cost, a low monthly cost, and only takes 4 squares. Let's see what we can afford, right? This will be a very expensive one. So for example, here, this is a nice location with customer traffic index 66, but we simply cannot afford it. Also, this is too expensive. Probably try this one. Customer traffic index 12. That is very low. You can also try this one, 12. It's at least closer to where things happen. 15, better. Also 12. 24, even better. 36, cannot afford. It's risky. This will be, not sure if this will work for us. Let's be more defensive. Let's really take something which was cheap. This one is 2.5, 467, 2.5, 2.9 already. Let's try this one. So now, with only 1.4 million left, we need to start selling our product. One purchasing unit, one sales unit per product. Now purchasing from ourselves eggs, frozen chicken, and frozen pork. Remember that we also do not invest into training because training costs money. No money for that. We will not invest in our brand. No advertising unit here. We will just purchase and sell. Now let's wait until the products are available in our store. Now they are available. We still have 1 million. We ran into already in 6 days an operational expense of 60K. Our overrating is too low. We need to lower our prices to get an good rating for eggs. This actually seems to work. Let's see how this one goes. For chicken, also will reduce. This is not enough. We need to go below this. Let's even go more aggressive here. This one is good. And for frozen pork, this will be difficult to get up. We will probably have a hard time already. The price is low. Yeah, let's try this price. And now let's see if sales go up fast enough so that our profit comes to us and we will survive this initial month. So what we see now is that demand is slowly increasing, but very slow. Probably the price is still too high. Let's try for another 5 days. We have now 15th of January. We sold frozen pork 1,700. We sold chicken 910. We sold eggs only 140. This is not enough. We need to further decrease our price. We'll go more aggressive now. Increase our rating. Let's go for 40. 43. 47. Let's also go more aggressive. And now let's see what happens for the rest of the month. Yeah, revenue goes up a little bit. Let's close the month with this price position and then decide how to proceed. So now we have the 1st of February. Yay, we survived the first month with only 10 million. We set up a medium-sized farm. We produce in the medium-sized farm eggs, frozen chicken, frozen pork. We set up a very small convenience store. Could not afford a very good place. So in the terms of marketing mix, not good choice, but simply said, the money is not enough. And started to sell at a very attractive price point our products. What we see now is that eggs, frozen chicken, and frozen pork actually goes well. Quantity of sold items goes up high. We have a good demand, which will soon reach, if this growth continues, the supply bar, the yellow bar. For frozen pork, it seems like we cannot produce enough. Let's see. We can take the decision now to already foreseeing that demand increases to set up another sales unit for each of the products to back up the growth we expect in the next month. We will do so. The investment will be 3 times 63K. We can afford this. As a rule of thumb, one purchasing unit usually can supply in terms of its own capacity 2 sales units. However, of course, the supply chain before that, backward supply chain, needs to work also, right? So now let's simulate another couple of days. And what really is really nice now, we see a green bar here on the 10th of February. So this means in February we earned already good amount of money. We earned year to date our first 122K. Congratulations. Let's continue for another 5 days and then check where we stand with our supply chain and see if we can optimize anything. We have the 15th of February. We see for eggs that demand outperforms our supply. Frozen chicken, we are almost at the edge. For frozen pork, we definitely have the issue that we could not produce enough in the beginning, but now it seems to settle down. Let's close the month of February. Still making sure that our operational expenses are below our income. Otherwise, we will soon end up in bankruptcy with only a little bit more than 1 million buffer. We are now on the 1st of March. 2 months survived. Our medium farm provides to our convenience store eggs, frozen chicken, and frozen pork. And we see that we, with our store, already reached the break even. And also, I guess, for our farm, we already reached the break even now with the month of February closed. This is good. This puts confidence in our business decision, which we did in the beginning to invest into a small, no, in this case, medium-sized farm, into a small convenience store, sell our own product, and now earn our own money. We already earned year to date 380. It's our operational profit. And also, nice, our asset values increased a little bit. So we also did some other profit. Our net profit is already close to 500,000. That's great. So X already, the demand is higher than what we can sell. The purchasing unit is also reaching high utilization. For frozen chicken, purchasing seems to be fine. However, sales units not fully utilized, still growing, I guess. Frozen pork is fine. So for eggs, we could think of increasing our capacity here in the store. Let's check what another floor in the convenience store costs us. It costs us almost 500,000. Should we take this? Should we risk having even less buffer below 1 million, expecting that our profit will regenerate the money? Let's try. Let's go into it. Let's try. Set up purchasing, 2 sales units, link to our X. We see in the farm, by the way, that for X we are fine. Yeah, the demand in our farm from our convenience store is lower than what we can supply at the moment. So this is fine. And let's go for another couple of days and see how it develops. We now still make profit. Half of March is simulated. Now with our dist added, second floor selling also X. And what we see now, we get a problem with the supply. Yeah, we get a problem with supply now. We have higher demand than what we can actually produce. And this is where we need higher investments. It's not simply adding a purchasing unit, adding a sales unit. It's an extending our capacity from production side. There are different ways of doing so. We will look into this later. Let's first check frozen chicken. Frozen chicken, also frozen chicken. Seems like we run in a similar situation. And for frozen pork, it's already from the start tough. However, we are generating profit, and now we need to think of how we can generate even more profit. One option could be to simply establish a second farm, produce more, double our capacity, and satisfy the demand. Actually, we have a lot of more on the market. We only have probably 1/5, 1/8, don't know, of the market share. But we don't have, simply we don't have the money. If we would like to set up a second farm here, remember that the costs are around 5 million, up to 6 million maybe. We simply cannot afford it without taking a loan from a bank. Let's just, for the sake of interest, we said we do bootstrapping, so we will not make use of external financing, but let's, for the sake of interest, see what we can get from banks if we would try to loan. There's an interesting view here in Capitalism Lab where we can see our credit limit if we want to loan from banks. Simply take a bank loan. The credit limit at the moment is 8 million. So if we almost take all of what we can take as loan from the banks and then invest in the farm, this could work out, but will be highly risky. If we will not stay profitable, then we would get easily bankrupt, because there would be a very low amount of money left as additional credit limit. Will soon run out of this buffer if we cannot increase profits very, very, very quickly, and then simply get bankrupt and would be out of the game. So this we will not do, and we also said we will not take. We will just simply do bootstrapping for financing. So this means we need to find another way. Another way is, of course, to increase efficiency within the production facility. In this case, simply the farm, raising livestock, processing livestock, and selling this to our convenience store. And this can be done via training. The question is now, what training can we afford? Yeah, how much training can we afford? At the moment, if we look into our income statement, where we see also a high-level view of our cost structure, we see that most of it goes to cost of sales. Of course, we have sales units, we have convenience store, for salaries, for workforce, for overhead, which is not too much in the last month, but we do not spend anything in advertisement, in training, and R&D, in donations, any write-ups. For advertising, we said, though this is one of the 4 Ps, it's very costly. We will not invest in our brand now. For training, let's try this. For R&D, no need. Products we get from livestock don't need R&D. Instead, the quality is improved by higher efficiency, specialized trained workforce. So 2 points here in the list covered by this. So it's investment which makes sense. However, we need to check what level we can afford. Let's try, and of course it takes time, right? Let's try half of the scale here. Half of the scale, and see whether we still operate under profitable terms. We will generate now the rest of March. We see already that the green bar here, did not rise so quickly, increase so quickly as last time. And we also see that despite having already the 3rd month, and there would be probably some still ramp up of demand and selling, it's below what we had last month. And the reason is, if we again look into our income statement, that we now invested 22K into our staff on the farm. 22K for half a month means we will have 50K of training costs per month. In the farm already we are making profit of 180. In the convenience store we are around 200. a little bit decreasing, I guess, because we are not providing enough products to the convenience store. So we should definitely be able to invest this. And we now probably we want to take the bold decision to even invest more into training. Let's go for 100K, the full scale of potential training. We have at the moment an operating profit of 300K. So we have some space. We'll go for full training now for the month of April, and let's see what happens. Seems like we are still profitable. 10 days in April gone. We have very high demand for our products, but we cannot satisfy the demand, it seems. We're having a hard time because our farm simply cannot produce more. An option now is to moderately increase prices. So at least for this, what we have available for sale, we can generate a little bit more income to cover also for our training costs. So we will increase very moderately to not lose our customers. The prices for eggs, also for chicken and for frozen pork. Yeah, we are still with the better rating, but getting closer to the city overall. Let's simulate the second third of month of April. So we are still selling. Let's see. Let's go through the full April. We are still profitable. We are overcompensating the higher training costs. April is gone. We are in the 1st of May. We see that our profits went down, but we expected this. Yeah, not higher capacity, instead higher expense by investing into training. Let's see, we spent in training in the last month almost 75K, below what we said with 100K would be acceptable. So this is fine for now. Still operating profit is there. We already reached more than 1 million of cash on our bank account. So this feels better now. And this actually we can afford. Let's see if we have any effect on our farm. No effect on our farm. Still, all of the units are in the level of 1. So no increase in quality, no increase in capacity efficiency at the moment. Instead, less profit because of higher costs. Investing into training in our convenience store does not really make sense because we are not using our units to the full capacity. And even here we have 0 capacity, so we actually don't need this unit. Same as for frozen chicken here. Never mind, we will keep it, expecting further growth. Not doing a write-off here. Let's go to the month of May and generate more income. Half of May now gone. Still costs go up, revenue goes down. Seems like our price increase did not work so well. However, still, we are not in the situation that we have any product left over for pork now. A little bit. So let's, to be safe, set a little bit better price position for pork. And still let month of May close. We see that our profit in May is a little bit above what we had in April. If we look in the income statement, operating profit on now exceeding 200K again. We are still on training expense of 75. The rest seems to be cost structure perspective quite stable. Operating revenue is now beyond 1 million. Let's see, still no effect of training on our units here. So still we need to wait for any impact of our training investment. At least for our convenience store, we got turnaround and we do not have decreasing revenue anymore. Let's simulate the next month. Go now a little bit faster. In June, we are now in 1st of July. Let's again check our income statement. Our operating profit went down a little bit because our revenue went down. This is a fluctuation, probably due to could not sell the same amount as previously. In our farm, frozen chicken is balanced actually. We are still all in level 1. Let's see whether yeah, let's continue. Seems to take a little bit more time. We almost reached the end of July. We are now on 1st of August. We again reached the 1 million operating revenue. That's great. So operating profit is almost 200K. Due to profit now quite stable with 200K per month in our convenience store and also almost 200K of profit in our farm. The revenue is higher in our convenience store, so actually we are not doing so much revenue here, but since we have lower prices simply. And we are investing heavily into training and expecting that soon any of those units which we currently use for processing at the highest utilization rate will increase in their rating, still all in one, and therefore generate higher quality product with higher efficiency, means higher output. Still, we are not able to invest into another farm or something else. 1.8 million is with such land cost simply not enough. We will now run through August. 27th, 8th, 1st of September. Checking again our income statement. Operating revenue 1 million. Yay. Operating profit above 200K. Also very good. Still same situation here. Little bit higher output due to a fluctuation, I guess. And here, relatively stable quantity sold. Are we able to sell the same quantity at even higher price? It's probably worth trying in case of X. Let's try this and monitor how it goes in September with a higher price. Almost reaching end of September. Now we have 1st of October. Checking our income. Operating revenue is slightly below 1 million. That's not good. Also, operating profit is slightly below. If we look here, we sold a little bit less in the month of September. It's probably due to 1 day less in September. We only have 30 days in September, whereas in August and July we had 31 days. It also in October we will have 31 days. So let's go and check whether in October again we will have 1 million of revenue. We are now having the 1st of November, checking our income statement. And yes, this is exactly the reason why we now have again 1 million as revenue and 200K as operating profit. And we see that actually this is also visible on our bank account. Now already having 2.5 million. This is great. Not long to go till we can invest in another farm or probably another convenience store. Not sure what will happen when we reach this point. This will take another couple of months. We are still investing heavily into training in our production facility, which is a farm. No movement here, always rating 1. The products are still with quality 30. It's the same output, all in full utilization. And sales units desperately waiting to receive more demand. Let's simulate another month, November. And again, check, same income. So let's close the first year. First January 1991, 365 days. We started with bootstrapping and very low initial capital of only 10 million. We set up a medium-sized farm. We raised livestock, produced 3 types of livestock products, bought a small convenience store in Bogota, generating profit from selling those products, now going down to below 1 million of our cash on our bank account, now having due to profits coming from our convenience store and farm, almost 2.9 million back on our bank account. Not enough to extend by another facility like a farm or convenience store, but already good trend. We are earning in revenue approximately 1 million per month. We have operating profit of 200K. And what are we investing in our 4Ps, in our marketing mix? We are investing at the moment in efficiency and quality in our production side to improve our product. We will keep the place of our convenience store. We keep the price slightly increasing if we see there's an opportunity, and not investing in advertisement for our brand too expensive. Our farm in Bogota is still delivering the livestock products to our convenience store. Our convenience store is selling it to our end customers, and we are waiting to either increase by the efficiency and the quality by training or having more money on our bank account than we can afford and invest into a second farm. We will now do, let's say, another 3 months of simulation. Maybe let's go for 2 months. Only stop the simulation in case we see any reason to stop the stop. We have now received 3 news from our newsfeed in Capitalism Lab. So in 1991, in the beginning of the year, there was a silica oil and gold deposit discovered in the cities of Leipzig, Bogota, and Palermo. Not interesting for us. It's only 3.1 million now in our bank account. No way we can invest into natural resources. No way to go there. We will simply keep to our current business model and organically grow our business. We see now that our much better situated competitors, 12 in the 4 cities we have in the scenario, with much more initial capital, can invest into research and development, into mining, into any other business model. And actually, it was announced now in February that one competitor, MoonHub, invested right from the start in R&D and discovered the video game console technology. Just to get a better overview how we stand compared to the other corporations, we have the LP corporation, very low cash actually, low operating profit is fine. Yeah, it's not the highest, but it's still fine. We see that other companies have higher cash, like 67 million almost here for West End. Global Link 65 million almost. We have some with negative annual profit, so seems like high initial investment but not working out yet. Some with rapidly growing operating profit, like West End, already 9 million instead of us was 2.5 million. An option we could take is to look for in Bogota any product produced by a competitor which can be sold in the convenience store. Of course, this could be always an option. And just if we do a dry run and look into linking our purchasing unit, which is currently purchasing X from ourselves, what else we have as options? No, not all cities. In the current city, from seaports, nothing. From all suppliers, we just see frozen beef here. From Fusion, there's a very low demand now. The price quality is already 39. Brand is 14. Price is 117. Frozen beef has a local price of 216, so $1 roughly margin possible. Adding transportation costs will be like 70 cents or so. Quality and brand, we can try sell it in our store. Simply catch some additional revenue. Let's try this. Let's try this. We'll set up a purchasing unit, 2 sales units. Link it to frozen beef from our competitor. That is. There's a price agreement. Because the competitor is selling it by themselves to a certain price, so we will not be able to set a lower price than them. Still, the overall rating of frozen beef is higher, so I expect that we do some sales. Let's try this out. We have now 1st of March. We, yes, now get what we need desperately from our heavy training investment. 75K per month into this farm. We reached the second level for processing units, and I'm expecting now that the efficiency will go up, the utilization, and that we will now process higher amount. For frozen pork, this is probably not working out. The processing unit is not full utilizing, but eggs and frozen chicken, this looks better. Let's simulate the month of March. Let's quickly check whether we sell. Yeah, we sell also our competitor product. Oh, we see how our profits go up. This is so nice. This is so good. Just 1 month with training, which actually now moved our processing units to level 2 in our farm. We added another product. We are selling also now beef, frozen beef from one of our competitors. We are making a little bit, 7K already, almost 8K profit. So that's a little bit, but we increased selling the quantity of eggs. Also increased the quantity we sold from frozen chicken. Still, with frozen pork, we are quite stable. The reason is that we are not generating enough pig at the moment to fully utilize our process capacity. So probably after we can afford and acquire a second farm, we can switch to fully make this one a chicken production farm and produce frozen pork in another farm. Let's see. This comes, of course, with some write-offs, but might make sense. Before we do so, let's check what this would cost us. A medium farm. 6 million we must have first. Okay, let's simulate the next month of April and see how nicely we increase our profits. So it's even higher. Let's check. It's now 1.2. We could increase by 20% our operating revenue and also increase our profit by almost 30% now. No, I think 50%. This is due to adding another product that also generates profits, revenue and profits. And now looking forward to grow our cash to buy another farm soon. Let's go for until May, June. Check again. 4th. 1st of July, 1991. June already running. End of June. Now we see that still we have 1.2 million revenue. We have almost 300K operating profit. We still face the same situation here. Seems like frozen chicken. Frozen chicken, maybe we will set up a second purchasing and selling line. Yeah, let's check later on. competitor increased prices, by the way, just seeing that. So that's why quantity goes down a lot. The rating is not very high again. However, we will keep selling it. It also seems that he's not able to provide more of his product to us. He's probably putting priority on himself. Yeah, and actually we are not able to buy it anymore. I think it will not arrive any longer because yeah, it seems not to be available anymore. So he set it to internal sales. Let's go to the supplier and see if this is true. For frozen beef, internal sales activated, so no way to get this anymore. We need to switch. We will now link it to frozen chicken. We have 4 million on our bank account, so reaching 6 million, we can invest in the next farm. Still highly profitable. Our sales units now advanced to second level. We're still investing full-scale training on this farm. We're now 1st of August. Still 1.2 million revenue, though our competitors stopped supplying us. For frozen chicken, we could increase the sold quantity a little bit by adding sales units here. That's good. Let's close this quarter by simulating August and September. Still a green bar showing up. Nice. Almost reaching end of September now. 29th, 30th, 1st of October. Year to date, 3 million revenue. 5.3 million on our bank account. For 6, we will take and investigate the option of investing in a second farm. We are still in a situation that the demand is much higher than our supply. We sold frozen beef. However, our competitor supplying it to us stopped supplying it to us. He's putting priority on his own retail stores, so we switched to frozen chicken, could even sell more. Let's check if there's any other option. There's no other option, just us with our farms. Others now entering the market. We need to monitor whether they are interested in exactly what we sell. No, it's not the case. Seems not to be the case now. We will now close the year with knowing that also our livestock now reached second level, and this means we have a higher quality rating of our product. We will now be delivering products with quality rating of 39 to our convenience store. This means that we increased our overall rating of our product because one of the 4 P's in the marketing mix, the product improved in quality, and so we can even more generate revenue. Let's increase moderately our price so that we can generate from our product higher profits. Yeah, let's try this. I think we can even go higher. Yeah, we always need to be aware that increasing prices will of course lower the demand too, potentially lower the demand. This is, I think, possible. Let's try this. Let's try this. Hopefully this goes well. Let's check for the month of October. We could grow our profits a lot. Let's check in our income statement. We see that we have now 1.3 million operating revenue. So this is another 10% more. Since our operational expenses we keep below 1 million, we now have a higher profit. So this actually worked. For the quantity sold, I don't see an impact here at the moment. Let's check. No competitor selling anything else to us. So in this case, we will continue and close the year. So month of November already running. This gives us a good feeling that our green bars will continue to grow. We have capitalism news in December. Also another competitor, Radiate Stars, invested into research and development very early and now invented a camcorder. Interesting, but not relevant for us at the moment. No money for such products. Close now the year. 24th of December. Christmas is over now. 1st of January 1992. Time for a short recap. 2 years ago in this scenario, on 2nd of January 1990, we started with 10 million of money and nothing. We decided to go the bootstrapping way, to start a business by only relying on our own initial capital, which was 10 million. We invested in the medium-sized farm in 3 types of livestock products. We sold it in a small convenience store at the border of our city of Bogota, and we could generate now in the second year already more than 3 million of revenue. We could increase the efficiency and the quality of our product and now regenerated 6.4 million, whereas we, after doing our initial investment, we ended up having less than 1 million available. And now for this year, we need to decide what we do with the 6 million to further grow our business. And like this, always reinvest and reinvest what we earn to grow our business, generate more profits, and get out of this relying only on livestock products, extending to other product classes, getting a more diversified product portfolio, also being more robust and resilient against aggressive competitors. Let's first of all check if we can afford, cannot afford a large farm. Let's check whether we can now afford a medium-sized farm. Yeah, we can afford it. It will consume a lot of our money. So it's not only an opportunity, it's also a risk. If this goes wrong, the operational expenses get too high and we cannot cover them with what is left on our bank account, then we might run into bankruptcy soon. We might make use of a small loan. Let's see. We will try this, but let's first decide what we will set up. We at the moment have highest demand for chicken and also higher demand for frozen pork than actually we can deliver to our stores. So we will now set up a farm exactly producing the same, having the same portfolio and delivering it to our convenience store, trying to boost our sales. Let's try this. This seems to be a good location. Putting it directly next to it. Taking the same setup as said, we will simply use our available resources to extend the capacity on the existing business model to hopefully not have any more risks because we know those products run well. And additionally, to not have too high expenses, we set chicken, pick. We will now simulate 1 day. As you remember, we need 1 day so that we can actually select the product, eggs and frozen pork. Now 1 day or 2 days to have it in our sales. We will take the same prices, 184, no, this is wrong, this one, 987595, 9875. Nine eight 87595. And now let's go to our convenience store. They have a similar setup: eggs, frozen chicken, frozen pork. Eggs, frozen chicken is already there. We'll now that's the same up. And now we need to, of course, choose the right ones. This one for frozen chicken, this one for eggs, is this one. We will, for our second farm, not invest into, no, let's not invest into training yet. To keep our operational expenses lowest as possible. We are below 1 million again. We need to be very careful now to not run into bankruptcy and see if this, what we are trying to achieve here, is actually working out. Please also remember one thing. The new farm will produce a lower quality, much lower quality. And it might be, let's see how this impacts our sales. Let's see, might be that we need to reduce our price again. We will now simulate the rest of January. What we see now on 2nd of February, our profits increased a lot. Good achievement. We see for all of our products, quantity increased a lot. We see, unfortunately, that our quality decreased. Of course, we're now adding products with lower quality to our store. Still, we have a higher rating, and still demand is high enough so that we can actually generate more profits. This is good. This way, we might stabilize our current business model, generate a constant stream of profits, maybe even have the chance to extend because we see that there's a lot of market share still open. And then after a while, invest into diversify our product portfolio, invest into our product portfolio. We also need looking on the side of the marketing mix, the 4 Ps at a certain amount of time need to look into not only investing into product, price, place, but also into promotion and advertisement. Looking at our current income statement from last month, we now reached 2 million operating revenue. Very good achievement. Operational expenses did not increase so much. 1.4 now. Operating profit more than 600K, 650K. That's great. We can definitely invest now into training. This will add per month another 75K. So this will reduce our profit, but this way we will increase our quality and efficiency. We don't want to keep a farm producing such a low quality for a very long time. Remember that it took around 12 months to significantly increase in quality. But at the same time, since training is still running in this facility, also this will advance, so we will constantly increase. We will now go for, let's say, another 2 months before we close the stream for today. And probably in another session, try to achieve a diversification of product portfolio. What we proved today is that bootstrapping finance is actually working in Capitalism Lab. It's actually working in the real life. We have let's say, a smaller company, medium-sized company very soon from 10 million, which is already actually a lot of money, $10 million. We now invest into 2 farms, generating 3 livestock profits, 3 livestock products, and in 1 convenience store at the border of the city of Bogota, still doing well, generating a lot of profit, generating